Today's topic is hard money lending versus 0% funding. And we're going to be breaking this down specifically for the use of fix and flips, right? So, are you guys a real estate investor wondering whether to use 0% business credit or a hard money lender for your guys' next fix and flip deal? And the truth is, there's not really a right or wrong answer. It's about knowing when to use each one. And make sure you guys stick to the very end of the call because I'm going to be breaking down the numbers, highlighting the pros and cons of each one, and showing you guys a real life example where 0% funding literally saves the day and increases your guys' profits. So before we dive in, let's define what exactly are we actually talking about, right? So hard money lending versus 0% business credit funding. So hard money loans, these are short term. They have high interest loans designed for real estate investors. They're great for funding properties quickly. However, they do have some drawbacks and some significant costs I'll go through in the next slides. However, 0% business credit funding, this is where we're leveraging 0% interest business credit cards to fund your guys' deals. There is a small fee paid on the back end after you get funded. So that's pretty nice because, right, you're not paying anything up front. It comes with a guarantee because if you don't get funded, then nobody gets paid, right? So really makes it kind of like a no-brainer offer, no risk for you guys. The other big thing is it's flexible, right? We'll go through it in more slides, but it's a lot more flexible than hard money lending because you're able to use this same funding for multiple deals versus with hard money, you're going to have to keep taking out a loan for each new deal. So that's where the flexibility comes. And then also it is a lower cost option. So that's going to increase your guys' profit on the back end. Now, today we'll kind of explore both options and focus on their applications and fix and flips. And if you guys are ready to add 0% funding to your belt of tools, then comment the word funds down below so we can chat about that and get you guys started. Now, let's go into the pros and cons. We're going to be focusing on hard money lending. So again, they are fast. The nice thing with this is you can typically close within 7 to 14 days. So pretty quick. The other thing is they offer high leverage. So up to 90% of the property's purchase price and rehab costs. So you're able to get a shit ton of money up front and relatively quickly, so that's great. Now, here are kind of the cons that come when you're using hard money lending, right? Is interest rates, they're typically anywhere between 12 to 18%. Definitely towards the 18%. I don't see that as often. 12% is usually the sweet spot. But boom, 12 to 18%, that's typically what you guys are going to be paying just on the interest. Now, another hidden cost for a lot of people in fix and flips is, they forget about having to pay points. So often it's 2 to 4% of the loan amount, and this is paid up front. And you pay these points every single time you guys get a new deal, right? And most fix and flippers are not just doing one deal a year, right? They'll be doing multiple and even multiple at one time. So 2 to 4%, you're already paying, thousands, even tens of thousands of dollars a year just on the high points. That in itself. Now, the third thing is it requires 10 to 20% of your own cash as a down payment. And for most Americans, you might be watching this right now. It's just like, I don't even have like 10K saved in my name, let alone 10 to 20% for purchase price and rehab. So this is where most people get stuck, and I might be talking directly to you guys if you're listening to this, but like this is where most, especially beginner fix and flippers, get stuck, is they just don't have the capital for that, right? It's a large upfront investment in the beginning, and then on top of that, you have to pay interest and the points, and this is usually the thing that deters most people from being able to invest, is they just don't have the money for it. Now, the other thing too is this is a short-term loan, so you have to pay it back within 6 to 12 months or you're going to pay some hefty penalties. So there's a lot of costs coming into this. Now, on the reverse side, let's talk about 0% interest business credit. And here is why it is powerful. Boom. So with business credit funding, right, the 0% interest is typically 12 to 18 months. So it could be even longer than the hard money lending. But let's say your project goes a little over than the 12 to 18 months. There are ways to where we could extend the 0% terms for multiple years by refinancing it onto another 0% card. So now it gives you a little bit more freedom and a lot less pressure on you if something does happen. Now, the other thing too, cost-wise, is there is a low upfront fee. With typical done-for-you funding companies, industry standard is 10%. If anyone's trying to charge you more, whether you guys go through me or somebody else, fuck that. Do not go through it. I had a client that I was talking to. She went through a done-for-you funding company, and they were charging her 20%. And then on top of that, they applied for 2 cards and only got her 20K. So one, they didn't even do a good job because, with those 2 cards, we could have easily got 50 to 100, right? And then on top of that, they were literally paying double, 20 freaking percent. So before she even got to invest the money, that was already like 4K out of her pocket. She had to pay on the back end for the funding fee. So just be conscious of this number because we really need to focus on this because we need to make sure the numbers work in comparison to the hard money lending or other costs. Because if you get cheaper money elsewhere, then go do it. But again, I always tell people the more different funding options you guys have, the more opportunity you can get because you have more money to invest in other projects. But as far as the fee, this is typically also paid on the back end, so no money up front, low risk for you guys. The other thing too is 0% funding is reusable. So what do I mean by that? When we talk about reusable funds, I mentioned it earlier, is that, let's say we get a deal, we get you 100K, you flip that deal, you pay back your lenders, pay back the cards, you get your profit, and you want to get into another deal, then great. Then you could use that same 100K again, because again, most fix and flippers are doing multiple deals, even multiple deals at the same time. Versus with hard money lending, you're going to have to take out a loan and pay interest and points every single time you take that out. So this is a huge hidden cost that people forget, is having to keep paying that every time for hard money lending versus this, you could use it multiple times within the 12 to 18 months of the 0% terms. So like typically in my experience with fix and flips and talking to a bunch of other real estate investors, flips could typically take like 3 to 6 months. So if you're able to use that 100K, 2 times, 3 times, 4 times, 5 times in 1 year and just keep getting your return, you are maximizing the true value of this 0% interest funding. So that is huge. You're going to be saving tens and thousands of dollars just on the fees on hard money alone. The other big thing is with this, our company does serve packages that have even lower rates than the 10%. So if you guys want to learn more on how to get 0% funding for even cheaper, comment the word funds down below and I'll walk you guys through it. But the nice thing, again, as far as the reusable funds, it allows you to get into more deals. But it also allows you to keep your savings intact. So you're not having to dip into your personal funds or trading one asset for another. It keeps it all intact. And any fix and flipper will tell you, you might budget for 100K for rehab or whatever it is, and oftentimes it's going to end up, it might go over budget. So you don't want to end up blowing all your savings for this one deal and then an unexpected expense comes along and now you don't have any more money to take care of it. That's where the 0% funding comes in. You could either get more 0% funding for that expense or use some of the savings that you didn't spend on it. Last big thing is more opportunities. So your capital, again, this relates back to this, is your capital isn't tied up in one deal. So you're ready to jump on more opportunities as they arise. Like you guys, I can't tell you guys how many times I've talked to real estate investors where they get into a deal, their money's all tied up, another deal, like once in a lifetime deal off market or something. It's like 100K below asking price. And they aren't able to get it just because all their money's tied up. So this will allow you guys to get more opportunities and scale even quicker. So here's just kind of a recap of everything we talked about. Hard money lending, it's fast for closing, good for large projects. You could get large amounts, high leverage available for purchase and price. Again, here's the drawbacks though, is it does have 12 to 18% interest. It requires 10 to 20% of your own cash up front. That's a lot of money, which most people don't have. You're paying points and interest are charged every time you get a new deal. So don't forget that every time. And then the short term does create pressure to pay back quickly. Timelines do extend sometimes. You don't want to be paying those penalties if you don't have to, but with hard money, you will if it goes a little over than expected. Now, pros and cons of 0% business credit funding, quick recap. Low cost option, 0% interest, no monthly interest payments eating into profits. They're reusable for multiple deals. You're able to keep your savings untouched for emergencies or personal use. You're able to create opportunities for more deals since your capital isn't tied up. And again, you have the option to extend the 0% terms for multiple years if your deal takes longer to get that ROI. Now, here's the drawbacks though, is it does require good credit to qualify. So this is the most important thing. So a strategy our company does is we get our clients approved for what's called a no doc check approval, which means we're able to get you funded even if your business is relatively new, even if your personal income's low, and you don't even have to have business revenue established yet. But the only reason why we're able to do that is because one, we make sure our clients' credit is optimized, and then also we leverage our connections, our understanding of the bank underwriting requirements. We know what to say, what to put on the applications. So if you guys are ready for funding, comment the word funding down below. If your credit's not just there yet, then comment the word credit, and I will send you guys tons and tons of resources on how to optimize your credit. You know, if your utilization's jacked up, your credit, you know, you have late payments, you need inquiries wiped off, your age isn't there, whatever it is, I'm more than happy to send it to you guys. So just comment the word credit down below and we'll hook you guys up. Now, the other big thing too is it may take a little bit longer. That's due to the optimization process, but also liquidating funds compared to hard money lending, right? Takes 7 to 14 days, big chunk of cash is in your account. Versus this, there is a process of optimizing and then liquidating as well, where we turn the credit into cash. So if you guys want our connection to do that, comment the word liquid down below and we'll get you guys plugged in. Now, here's the key takeaway though. It's not about choosing one or the other. It's about using both, honestly, and using it strategically. So hard money loans, they're great for when you need large amounts of money fast, but 0% funding can drastically reduce your costs and maximize your guys' profits and create more opportunity to scale even faster. Now, what I want to go into next is let's run the numbers. Let's go through a real life case study, and I'll let you guys decide which you guys think is the better option. But here, let me paint the picture. Here's the scenario. So purchase price, let's just say it's 150, rehab is 50, the loan amount total is just 200. So these two added up. Let's just say the ARV is going to come out to 300K. So 100K, boom. Now, option one, if we're using the hard money route, right? Let's just say for this example, the interest rate is 13% annually. So right then and there, you're paying 26K in interest just for that one loan, right? And then on top of that, let's just say the points, we're paying 3 points. That's 3% of the loan amount. That's $6,000. So boom, 32K right off the bat. And your monthly interest payment is going to be $2,166 for the year. So 32K right off the bat. Total interest payments 26, points up front 6K. Total amount is 32K just to borrow the money, right? Now, let's take another approach if we're using the 0% funding, right? Let's say the loan amount is still 200K. We're getting that through, a couple of 0% interest business credit cards. Industry standard is 10% upfront, but again, we do have other packages where it's lower. But let's just say it's 10% on the higher end, right? Now we're paying 20K flat. And again, this is paid on the back end after we get you funded. So no money up front. So 10% of 200,000, that's 20K. And the beauty of this is there's no ongoing interest. So your money, your profits aren't getting eaten up by interest. There is one thing I do want to clarify though, is there is a 1% monthly payment that goes towards the principal. So for this example, if we max out 200K, the first month payment's going to be 2K because that's 1% of this. The next month, and that goes towards the principal. So next month you're paying 1% of 198. The next month you're paying 1% of 196. So each monthly payment that goes towards can be a little less, and it goes towards the principal. So it's not an interest payment, just to clarify with people. Now, obviously here's the comparison of cost, right? Hard money loans, we're paying 32K. And then on top of that versus done for you funding, we're only paying 20K. So here's kind of the key insights with this little scenario is one, cost savings, right? Using DFY 0% funding saves you 12K compared to a 13% hard money loan with 3 points for a 12-month project. Again, the other thing too is there's less money paid up front. With hard money lending, you still need that 10 to 20% down versus the 0% funding. You can just get that 10 to 20% down with that. The big thing too is flexibility. With 0% funding, there's no pressure to complete the project quickly because there are no monthly interest payments. Lastly is, I keep coming back to this, but the scaling advantage. The 0% funds are reusable for multiple deals without paying each time, while hard money lending typically requires that 10 to 20% down of your own cash and repeated points and interest for every new deal. So most flippers struggle with getting that 10 to 20% down to invest in more deals because their cash is tied up. So they leave opportunities on the table to their competition who will purchase it. So here's something I want you guys to remember is, again, there's no one size fits all. The smartest investors know how to use every single tool available to them. Hard money loans have their place, 0% funding has their place. But if you're not using 0% funding in combination with these things, then you guys are leaving money on the table. You can use the 0% funding for the 10 to 20% down payment, then fund the rest through hard money lending. Like me being in California, odds of me getting $1 million in 0% funding in a fast enough time isn't really realistic. However, I could use, a 0% business credit card, get 100K, use that as the down payment, and then fund the rest of the hard money lending. Now I'm not paying that 13% or 3 points on that 100K. So I already saved freaking 13K, like 16K right off the bat. So the beauty about merging these two tools together is you could literally come out of no money out of pocket, as well as fund even more deals at one time without having to keep paying additional points, taking out new loans. I hear a lot of real estate investors where, they're like, oh, I had to sell my primary residence to get into this investment property. But here's the thing is you could have your cake and eat it too. So you could keep both. You don't have to worry about that. Now, here's kind of the end conclusion I want to leave with you guys, like really, really think about it, right? What if you guys could literally cut your costs in half on every deal, right? What if you could fund multiple flips at once without tying all of your own cash? Like literally, what's that going to do for you? Like, is that going to help you guys get more deals? Is that going to be able to help you guys make an extra 10, 20, 30, 40, 50, 100K in profit a year just by using 0% funding? Is that going to help you guys take that vacation, spend more time with your family just by adding another tool in your belt, right? That's the power of 0% interest business credit funding. 0% funding is literally a game changer for real estate investors. But let me know if you guys would like further refinements or additional resources or examples. I'm happy to walk you guys through it. Now, if you guys are serious about maximizing your profits and scaling your real estate business or any business at all, this applies to any sort of business, comment the word funds below and we'll see if our done for you funding services are a good fit for you guys. But last thing I want to leave with you guys is, once again, there's no size fits all. You use everything within your power. But the last thing I want you guys doing is blowing through all your savings, paying too much in interest, losing out on deals. But as usual, you guys, thank you guys for lending me your eyes, ears, and attention. And as usual, peace out, much love, stay beautiful, and we will see you guys in the next one. Peace.